Welcome to Count Me In. Today we're joined by Alex Louisy, co-founder and CEO of Upflow, to explore the evolving B2B payment landscape. Alex highlights the challenges of ensuring timely payments and the need for more modern online methods that give vendors control while improving the customer experience. We discuss the inefficiencies of manual payment process, the benefits of automating invoice reconciliation, and the competitive edge gained from digital payments. Alex also stresses the significant impact of late payments on businesses and offers strategies to encourage customer adoption of new payment methods. Tune in for actual insights on optimizing your order to cash cycle, enhancing departmental collaboration, and driving financial success. Alex, I'm really excited to have you on the podcast. And today we're going to be covering things about the business, the B2B payments and that landscape. And because you're definitely an expert in that with your organization, Upflow. And so just to start off, what is the current state of the B2B payment landscape and what trends are you seeing emerge, especially as you're looking at a lot of data, you work with a lot of customers, and it's definitely an up and down, especially with the way the economy is today.
Exactly. So first of all, thank you so much, Adam, for having me today. I think we're very happy to share some of the learnings that we've had from working, as you said, with many customers and companies trying or actually getting paid. I think the landscape is quite interesting because it's moving fast, right? I think that's the first thing that we would have to say. If you look at all other industries, consumer payments, everything has already shifted in some ways, but B2B is still at the very beginning of a shift. And that would be what I would say as the first trend that is interesting to notice. Is the fact that we're still in the early stage of a big shift towards probably online payments, right? So I think if we look at this report that we're going to publish on a regular basis, if you look at this specific session of this episode, the first thing that I would say is that we notice a stark difference between industries, right? Whether it's about DSO, so day sales outstanding, how long does it take you to get paid, or the kind of what we call the at-risk rate in terms of the propensity to just never getting paid by your customers, you can see that there's a wide difference per industry, right? Some industries, typically these industries are towards technology and subscription-based type of business, usually have much better terms in terms of DSOs and at-risk rate than the more traditional industries. So think about manufacturing or anything that is related to consulting firms. These are the worst industries when it comes to getting paid on time by your customers, right? Under this kind of first frame of looking at the numbers, there's another interesting aspect of it is that if you look at the traditional one, the one that are not performing really well, if you look at one specific industry, then the variance is much larger than in the good industries, right? And what is interesting there is to think that yes, sometimes you're in an industry where on average, you're not going to get paid really fast. But if you implement the right strategy, you're probably going to be paid much faster than your competitors or people that are in the space. So that would be something that we find quite interesting because I think it tells a lot about the fact that as a finance team, there is things that you can do to actually get paid faster. So that's the first general trend. The second trend that we see in general that we think is fascinating is the fact that whenever you're using modern payment method and specifically online payment method, you get paid much faster. And that's not a question of whether you're a consulting industry or the tech industry. This is just across the board implementing online payment method and making the checkout experience for your customers simpler, accelerates your payment. And that's something that is really interesting for us to think as finance teams as well.
That is very interesting because, obviously we have to get paid to be able to pay our bills, to be able to continue running as an organization. So that's hugely important. What kind of impact do late payments have on organizations? I'm sure if anybody works in an organization, they see that impact, but maybe we can talk about can we quantify that a little bit?
The first interesting thing is that a lot of people actually don't see it, right? There is the statistics around the fact that, probably 25% of business go bankrupt because of late payments, right? That's the kind of moment where you see the reality quite hard, and that's where you see it. But in general, when you talk to finance teams, yes, it's not perfect. Yes, it takes them a lot of time. It's a headache because they need to go after unpaid invoices and chase customers. But when you ask them, can you actually quantify how much it hurts your business? They can't really give you an answer, right? And I think this is something that is super important because we look at it from many different angles. But I think like the most basics one would be like getting paid late. And you can put for anyone working in finance, a weighted average cost of capital on how long does it take you to basically bankroll your customers. The
Hmm.
money sitting on the bank account, not on your bank account, is basically something that you lend money to them, right? In some ways. And you can put a dollar value on this. So that's the first thing. But that's not the most obvious one in terms of impacts. The highest impact that we see is in invoices that are actually never paid, right? And having a clear visibility on those invoices and the percentage of your revenue that you never collect is something that is important. Now, that's something that we often say is that sometimes the accountant is going to come and just write off some of your invoices, right? And this is the moment where you actually recognize that you are never going to be paid by your customers. But
Yeah.
the point that we have at an operational level is that sometimes we see like invoices are sitting in account receivable for like more than 6 months, 12 months, and maybe they're not written off. Maybe you don't have an auditor that comes and say, hey, you have to write off those invoices. But the reality is that as an operator, you know that they're never going to be paid. And so I think, the approach that we have at Upflow around this is to say, well, that's how we define like some kind of like at-risk rate, which means whether it's been written off or not, just be mindful of like how much of these revenues are likely to never be collected. And that drives those two metrics, drive like very clear dollar value on a monthly or on a yearly basis that your business is actually incurring because of bad management on your accounts receivable. Just as a spoiler, this amount is usually way higher than you think. And I highly encourage like every finance professional to try to think around this. Like we have tools to do this, but you can do this as well, like with a simple spreadsheet, because it's way, way higher than what people think.
Yeah, definitely. And I know you have some specific numbers, so I encourage everybody to check out the report. We have a link to your Upflow's report in the show notes just to get all those numbers that we're not boring you with numbers today, but if you want to check out all those specific numbers, please do that. One of the things you mentioned that in your first answer was about how technology can kind of help encourage those payments and get those payments come faster. But when you and I were first chatting a few weeks ago, you mentioned something about technology friction. And I think that's a big part. Technology friction can impact your late payments in transactions. Can we talk a little bit about that and maybe give some examples?
Absolutely. I can give you like an example that is not even about technology, but if you just think about like what is anti-technology, which is a check, right?
Mm-hmm.
This is a big friction in how you get paid, right? Like having a piece of paper that you put in an envelope and where you literally have to manually like pick it up in the mailbox and stuff. Like when you think that it's 2024, right? It just doesn't make any sense. And I think like in general, if I take this example of checks that are like the extreme case, right? But in general, the order to cash cycle and how you get paid by your customers in B2B, this idea that like you send an invoice as a PDF, that the person needs to download it, kind of like open it upon the due date, et cetera, et cetera. All of these steps are like riddled with inefficiencies, right? And the challenge we have for finance teams is just to realize that it's not about like trying to invent like new payment rails, right? We're not saying like you should put everything on the blockchain or anything
Yeah.
that seems like totally crazy, but just like even like implementing card payments or online payment initiation so that you know exactly what you are paying and not having to do like a kind of a manual cash application. All of that is not a revolution per se, but problem is that as a finance team, when I need to implement that, it's not that easy, right? Because it's accounts receivable, it's your customers. You can't really force them as opposed to vendors where it's easier to tell them like, hey, if you want to get paid, here is the process, right? For customers, it's a little bit different. And I think that one of the things that is very important is trying to have a kind of a global approach on like how you incentivize your customers to pay with the payment method that are best for your business, right? As a vendor. And this is not easy. This is clearly not easy. And the challenge that you have is that it can't happen overnight. It's an incremental step. Let's say that you have 1,000 customers. And if you think that like you're going to wake up tomorrow and say, well, starting now, everyone is paying by ACH debit and I'm going to charge you when the invoice is due, of course, you're not going to get it. Now, the problem is more around in terms of the incremental steps on how you get there and having a strategy in mind to reduce this friction over time so that your customers can pay you easier. The point that I would say, Adam, is that, whenever we talk about late payments, everyone loves to talk about bad payers. And there is this feeling that like the only reason why like you get paid late is because there's only bad payers out there, right? But if you've built a business and if everything works well, right, you usually have a lot of good payers, right? People want to pay you in general, right? Not saying 100%, but most of them won't. And
Yeah.
so we really want to flip that kind of like vision around late payments to say, hey, how can I make this experience a better experience? Because that's really what it's all about, making this experience simpler and faster for everyone, customers, and yourself as a vendor.
For sure. I mean, if you make it easier and faster, people will be willing to pay because there's no prohibitations. Because when you're trying to just think about as a just a regular B2C customer, if you're trying to check out doing the checkout process and that you find any challenge, there's a lot of probably a large percentage of people, unless you really want that, you're like, I'm going to go somewhere where this is easier. And
Exactly.
so you want to make that easy for because people who are paying a B2B payment are still B2C type people. Like they're still a customer, even though they're a business, and you want to make their stuff easy for them.
Exactly. It's interesting what you said because, we often give this example about like, marketer thinking about like the conversion on the website as a
Yeah.
funnel, right? And, you're trying to optimize every step of the funnel. And the payment one is a very important one, right? If you try to pay and, it doesn't work, then you're probably going to lose the user or the customer, right? And very few people think like this when it comes to B2B, when they issue like 1,000 invoices a month, which means that there is 1,000 payments that are expected to come into your bank account. And that reoccurs usually like every month, right? And so you can try to think about this payment experience exactly in the same way as in the consumer world. And you mentioned the name that I said earlier around the checkout page, right? Even
Yeah.
this does not exist in the B2B world when this is the basis of like, hey, I want to see what I owe to this vendor, the list of outstanding invoices, and a simple pay now button. How many B2B invoices are paid like this? It's really rare. Getting to this point where you really like try to optimize this experience is really, really important to be more efficient in how you get paid.
Yeah. And so it's very clear that having the right technology in place is very important, especially for these type of transactions. What are some of the biggest challenges that organizations face? Because when you think about it, uh, finance and accounting teams are sometimes the last parts of the organization to get new technology. Part of the reason is, they're a cost center. And so a lot of people see them as a cost center. And so they're like, oh, we'll get to that eventually. Or, it's hard to actually implement projects within the finance and accounting team. So what are some of the biggest challenges that you face, especially when you're trying to adapt new technologies within that organization? And how can we overcome these challenges?
Yeah. I think it first comes down to the point that we mentioned earlier about measuring, right? We hear a lot of people telling us like, oh, this is not a priority. Well, once you realize that like you have 1 or 2% of your annual revenues that are never collected, or that you're experiencing like DSOs that are like way higher than the payment terms are on your invoices, and that it really hurts your business in terms of working capital, then suddenly you can shift the strategy and say, well, you think that this is not important, but I can tell you that this is really important, right? The sales people are and revenues are usually like always front and center, right? When they close a deal, they
Yeah.
gong the gong and everyone is having a big feast. But what is happening if you never collect the deal that has just been closed, right? That just closed. And so I think it's important to shift that vision and shift the priority as a finance leader to just say, hey, this is the real cost of like what we're talking about. And that's why this is going to become a strategic project, right? Now, as you said, the finance teams are usually the last one to just kind of implement the new technologies and everything. I think one thing that is super important is being in the right ecosystem. So having the right ERP or finance tool that can actually
Yeah.
grow with your business and can also enable like the connection with the right tool that you need. So, if you need an expense management system, of course, it's easier if it connects directly to your accounting system that you've always been using, etc. So, which requires that you've chosen the right accounting system in the first place. That is something that is important. And then I think there is also like a kind of a tendency from, build versus buy, where sometimes like, we've seen some finance teams trying to get the engineers get away from the product to try to build like a little payment module as part of their experience, depending on like who are your customers. But I think this is usually like bound to failure in the sense of the product teams first, it's not necessarily the job to work internally for the finance teams. And then the second thing that I would say is that this requires like, kind of like a lot of dynamic changes all the time,
I
right?
agree.
Because you're going to open a new market with new currencies, you want to implement a new workflow, new payment method. Of course, if you're selling to customers in the US, it's not going to be the same as in Europe. And so I think one of the challenges is that you need to find the technology that can evolve with your company. And in the same way, like no one is building a CRM, just buy like either Salesforce or HubSpot or, and you do your kind of RFP, what's best for you. I would highly encourage the finance team to just kind of like try to see what are the tools that they can buy so that they can grow with them towards that goal. And especially in this category of like how you get paid by your customers, it's still like very nascent category. Sometimes like we see people trying to build instead of buying, and I think it's usually leading to terrible outcomes for these finance teams.
Yeah, it can definitely lead to some terrible outcomes. So, as you've observed many organizations coming and utilizing a better system and seeing that be successful, are there some, I know I said it when Boris was numbers, but are there some good revenue things like, hey, they were able to get this much revenue? Like, have you seen those kind of trends as
Yeah,
people implemented these solutions?
absolutely. I think one of the things that is highly satisfying for those finance teams when it comes to cash collection or when it comes to how you get paid is that you can very very easily measure the impact of like any changes that you implement, right? So let's say that like you move 20% of your customers on CH debit or cards that you charge, right? The impact usually on DSO is just the drastic impact, right? So because suddenly like all of these customers or the vast majority are going to be charged exactly on the due date of the invoice, right? So it's really easy to measure the impact of such changes, right? But to do this, you need to first implement these new payment methods, and it's not always easy. And then you need to have a strategy to roll this payment method to your existing or new customer base, right? And I
Yeah.
think that's where we really like to position the CFO not as a kind of a back office function where it's just about like, all right, so here are the 1,000 invoices, we now need to collect it, and then you're going to spend like 2 weeks in a spreadsheet and do some cash application on every day, but more trying to have a holistic approach around, hey, how can I work with the sales teams, for example, to explain that maybe giving an incentive for a specific payment method makes a lot of sense for us as a business, right? And that's a different way of like looking at like the role of the finance teams from my perspective, because suddenly like you're front and center in the global operations of the organization, as opposed to being a back office function. So I think you can definitely see the impact. We've seen like a lot of finance teams are reporting to their board on the progress that they've made on such changes, whether it's because they've saved costs, reduced the time to get paid, improved the customer experience, because that's also super important. There's a lot of things that are way beyond like just the simple back office function that no one really cares about and no one is really measuring because, it's just things that we need to do and it doesn't really matter. So yes, definitely you can measure that and measure the impact in a very positive way.
That's amazing. And let's dig into a little bit more about the CFO and their role in this whole implementing this technology and how they can improve their strategy. How, what does how can the CFO take their team from, hey, we're just a bunch of back office people trying to get things done to, hey, we're in the front, we're in the forefront, we're part of the strategy, we're getting things moving forward, and we're reporting to the board because of all the great things we're doing and being a part of the sales conversations. Because a lot of times sales does their thing and then they say, oh guys, do this. But how can we
Yeah, absolutely. It's not being an afterthought and just thinking like, oh, we closed the deal and then, we don't know what's going to happen,
yeah,
as opposed to being like more together. Again, I think it starts with like more visibility, right? The visibility on like how important it is for the business. When there was the credit like liquidity crunch in 2 years ago, everyone started when the money was not unlimited anymore and the interest rates started to go up. Suddenly, everyone realized that, well, there is no free money anymore. And sometimes people had millions sitting on the bank account of their customers that were not even chased, right? And so some companies were literally running out of cash when there was cash available that should have been on their bank account, right? And it's classified on your balance sheet as an asset, right? Accounts receivable. Well, it's a great asset, but it would be even better if there would be like this asset in the form of cash on the bank account, right? So
yeah,
I think that the finance teams can have this role of like explaining how important it is. And, I often tell this kind of like little joke to you, or it was not a joke, but like this little story from my previous job before we started the company, where I used to work in a company where as a salesperson, I would sell to customers, but I would never know if they would pay us or not. And sometimes we would sell to many customers that would never pay us and no one was aware. Right? And so closing this loop where, I'm not talking about like flowing back commissions or, kind of like getting to the next step, but just simply this visibility of saying, well, these are the best performers, not necessarily in terms of deal closed, but cash collected, and having this information available is actually a great way to bridge the gap between the sales team and like a finance team and work together towards objective. Right now, it's usually when you start surfacing those numbers, this will drive also some changes into how the business is run. Typically, like I always remember like something that was quite enlightening for me, hearing from the CFO of Carta in the US, Charlie telling me like, well, we've implemented a flow where whenever you close a deal, the default proposition is that the customer has to sign an SEH debit mandate so that we can charge them whenever an invoice is going to be due in the future, right? And I found this approach really interesting because you're suddenly reversing this approach from we just send out an invoice and we'll let the customers pay the way they want. So if they send a check, well, actually we take the check. And if they do a wire, we do the wire, and move back to the default value proposition is we're going to charge you, right? And that's how we work. If literally saying in some ways, if you're not happy, you can go and see a competitor. And it's not necessarily the case, right? Of course, you can make an exception. Of course, if like there is if this is a big deal blocker, but the reality is that instead of having 5% of your customers on direct debit, you might have 60% of your customers being charged. And that makes a whole difference. But I think again, coming back to your initial question, it requires that the CFO and in general, the finance function is really business driven and one works hand in hand with the business team so that you can then implement the strategy that makes more sense for the business. And it's not the other way around. If you just come and say, hey, we now have to do this, it's not going to work. So you really need to explain like how you do this and then get the right processes in place so that you can improve the situation.
I think this is just another great example of how important it is to break down the traditional silos within corporate structure where it's like, oh, you do your role, I'll do my role, and we'll send emails to meet in the middle. No, we can't have those divisions anymore because what you just described is not how many organizations work today. And I think it's hugely important that we have these conversations and that people really start thinking about it from that perspective.
Yeah, and it requires, I would guess, like the involvement from like the top management and the founders. And, you need to have that willingness to say, hey, we need to work together, right? There is no point in closing a deal if, this deal never goes live, if the customer is not happy and if the customer is not paying us, because chances are that like we are a for-profit business, maybe not, but in general, that's the vast majority of like what salespeople do. And there's not too much of a profit if, it ends up never being paid. So I think it's important to have this clearly as a kind of a general mindset for the organization as well.
Yeah, that makes a lot of sense. And I think the other thing is having the finance and accounting team really show the numbers. We all know how important cash flow is. And you mentioned like during the pandemic, people left millions of dollars in bank accounts because they just didn't bother. How important it is to kind of create that saying, hey, look at our cash flow, look at what we're missing because of these late payments. This is why we need to do this.
Yeah. One of the metrics that we often have in the kind of like the tech industry is, like the kind of like a cash collection coverage. So you just kind of like have this very simple metric around this is my monthly recurring revenues and this is how much we collected. Just having a goal that says, Jason Lemkin talks a lot about this, but just having a goal that says, well, on a given month, we want to collect like more than 100%, of our monthly recurring revenues.
Yeah.
And just having this number that is not necessarily the only one, but one of the key targets for the organization that sit like in the middle of the room on like one of those big TVs where, you have all the sales number and, maybe like some of the product metrics, and also having this one, I think for me is super important. At least that's what we have here. I mean, I'm obviously a little biased, but I think like a lot of companies should have this number as objective because it tells a lot as well about the quality of your revenues, right? It's easier to issue an invoice than actually getting paid by customers in some ways. And it's not necessarily because of the technology, but also because, anyone can issue an invoice, but a customer will only pay you on time and will pay you correctly if the services that you deliver are actually good services, right? So that's also a point that is very important. And that's why also investors are kind of like very careful about this cash collection rates, because it tells a lot about the quality of your business.
It really does. And as we've been saying since we started, if you're doing a great job and things are going well, people do want to pay you. They want to do business with you, want to continue. And so
Exactly.
if people aren't paying, should you look back and say, okay, first of all, is our technology working? But second of all, are we doing a good job that people want to pay us?
Exactly. That's the overall. As I think it's actually closing the loop, and from like doing business and being paid is part of this loop. It's not, it's just one step. In the same way, like sending a quote or sending out a contract or delivering the service is also part of this loop. But this loop is like the closing one, and I think we should pay close attention to this one.
So when we're looking at, using technology for B2B payments, is there a certain payment that people prefer over other ones? Is there one that you see that is more effective than others? Like, what have you seen in the data?
Yeah. So I think that this is really, really clear, and the report showed like a lot of details. But if I need to summarize, all online payment method, and specifically payment method that allow you to charge your customers, are the
Hmm.
most effective as vendors, right? So it's really this idea of like, is this push or pull, in the sense of, as a vendor, am I pulling money from my customers because I charge a card, because I charge like an ACH like mandate, or am I waiting for the customers to push money to me, right? So that's
Hmm.
the other way around. And I think whenever you wait for them to push, it's not that they don't really want to pay you, but just think about this, right? I send you an invoice, Adam, and I say, well, you received this invoice today, but it's only due in 90 days. So now Adam needs to remember, or has a system to just make sure that in 90 days, the payment is being triggered. And so many things can happen, right? Of course, you can forget about it. But if there's any issue, if there's any additional validation needed, if, all of those steps make it really, really unlikely that like on the 19th day, you're going to just make that payment exactly on the due date, right? And so whenever you have a payment method that is online that allows you to charge your customers, that makes it like way, way easier. Now, what we often hear from, the market and especially customers, everyone says, well, I want to keep control of my cash flow, so I'm not going to do that, right? But this is exactly the same as for us in the consumer world when, I have my credit card on Spotify or Netflix, right? The reason why I have my card there and Netflix can charge my account every month is because I still have control, not because I control the payment method, but because I control the product, right? I can go in the product and say, well, I want to cancel my subscription, right? So I would really invite people to think about this in the sense of, how can I give customers a possibility to still retain control while having a payment method on file, right? And it's not that easy. It's like you can do this in a product where you say, well, I have a payment method on file, but I also have an interface where I can just go and say, I have 5 invoices outstanding, 4 of them are totally fine, but this one I disagree and I want to discuss about like not paying that invoice, right? If you can provide them with this interface where they can
Hmm.
control this, then they're way more likely to give you a way to charge their account, right? Because again, as we said earlier, they want to pay you, right? Because they want the services, they want a good relationship. And so what we've seen in many, many times is, for 5%, or let's say like a random number, but for 5% of invoices that I will not want to pay because I want to, um, raise a claim, or I have an issue with this invoice, because I don't have the technology to do so, for the 95% others that are totally fine, I'm still going to use that legacy payment method that is in the form of a manual wire transfer, or, that I'm going to initiate myself. So this is the thing that we're trying to kind of like have people think about, is how can I give them the technology for me as a vendor to charge them while leaving them the control, because in that case, you have a much, much better rate. The other thing that you have with online that, is often unnoticed, because this is a pure back office function, is the cash application process, right? This
Hmm.
idea that you need to reconcile a payment with an invoice, and this is done manually or with a software that is kind of like helping you doing so, is a total nonsense in 2024, right? Like, is there someone at Amazon just matching like $9.99 with the payments that we made? Of course not, right? And this idea that like there is a disconnect between those two objects is, from our perspective, does not make any sense, right? So if you can also use an online payment method where when the payment is being triggered, you know exactly what is being paid so that you can actually reconcile and write that back into your system, effectively doing this cash application automatically, then this is also we've seen that a lot with high transaction volumes type of businesses. If you have millions of transactions a month, you have no other choice, right? You usually have to implement something. But for people that do like 1,000 invoices, you know, we often see them like having someone coming in the office every day, opening up the bank account, opening up the ERP, and just manually doing this before they can chase. This is also a step that is often like overlooked that people should be looking at, because online payments also brings this kind of like capability where you can save time, reduce errors, and in general, like improve the efficiency of your business.
Yeah. I mean, that's a big time. You make it easy for your customers, they'll move forward. You make it easy for your back office team. I mean, it's a win-win on both sides.
Yeah.
You know, and I love asking this question to people, especially organizations like yourself who are in there working with in technology and trying to see what's coming forward. What do you look at when you're looking into the future? What excites you? What innovations excite you about, you know, what's coming in the future years as you look to improve this process even more?
Yeah. So I think overall, what is really exciting, but also like quite surprising, is the fact that like we're really, really at the beginning of the curve, right? Still, like, you know, when you think about 40% of the transactions still done by checks in the US, and the vast majority of this, all of them being offline, it's insane, right? It's
Yeah.
2024. Everyone is getting excited about AI. Like 3 years ago, everyone was getting excited about blockchain, and that's amazing. But suddenly, when you sit in your chair as a finance person, as you said, you're a consumer as well. Like you have an iPhone or like a smartphone in your pocket and everything, but suddenly having to deal with these processes is crazy, right? And it's nonsense. And very few people realize that, right? So what I think is exciting is that the change is going to occur in the next couple of years, in the next couple of decades. There is no way that like we sit here in 2050 and, you know, I'm just collecting a check in the mailbox, right? So I think this is exciting that the change is happening. And why is this exciting? Because I have a I have a deep conviction that like businesses that will be ahead of the curve, right? The early adopters of like this technology will literally take an advantage over the competitors in this space, right? And I think that's something that is important to realize. Now, if I just move away from just this realization of like the current market and where it's going, the one thing that I find really exciting in this kind of change in B2B payments is the fact that like it's probably going to incorporate like the customer experience, and
Mhm.
payments is going to kind of like redefine and be part of like redefining the customer experience, right? What I find really interesting is that heard so many CFOs and so many leaders telling me like, well, we do everything really nice, right? When we prospect customers, when we onboard them, when they sign a contract, when they use our services, but suddenly when they have to pay, they have a miserable experience, right?
Mhm.
I've heard that so many times, and that's true, right? When you get like invoices and you don't even know what you have to pay, and it's buried in your inbox, and then
Yeah.
suddenly you get those horrible automated email telling you that you haven't paid. Sometimes you've already paid. All of that is a miserable experience, right? And what I find exciting in this kind of like upcoming change in B2B payments is that I really believe that like finance leaders will start thinking about this as well. This is part of the customer experience of people interacting with our company and buying our services. Payments will be part of it, right? And to your point earlier today on when you were talking about the role of the finance teams and not being siloed and everything, what I find really interesting is that as a finance leader, I can now position myself as literally like same as the marketing person in some ways and say, we want to improve the experience and the brand and the perception that people have and customers have of our business through payments. And I think this is really exciting and really something that is very different from like the vision that people had from finance teams a couple of years ago, when this was just all about like looking at the past,
Yeah.
crunching numbers, and not really being part of the business. I think this is something that is really, really interesting to consider and position ourselves as finance leaders towards this role rather than a back office role.
Well, Alex, I just really appreciate your insights and just thank you again for coming on the podcast.
Thank you so much for having me, Adam. It was great chatting with you.
This has been Count Me In, IMA's podcast, providing you with the latest perspectives of thought leaders from the accounting and finance profession. If you like what you heard and you'd like to be counted in for more relevant accounting and finance education, visit IMA's website at www.imanet.org.